What's up, guys? Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. Also, hit that post notification bell so that you're notified every time I upload a new video. Be careful down in the comment section of the videos. A lot of spam, a lot of scammers. I will never ask you to contact me by WhatsApp or Telegram. I also do not invest money for my subscribers, so please be careful. Don't get yourself scammed. If you want up to 12 free stocks, Webull is going to give you up to 12 free stocks when you open a new Webull brokerage account. Put any amount of money in that brokerage account. They're going to give you up to 12 free stocks for just trying out their brokerage app. There's a link down in the description box of the video. Go click on that Webull link. Open up your new brokerage account today. Go get that free stock. Go get that free money. The February 2023 CPI report came out on March 14th. And I thought it was good news. Month over month, inflation increased by 0.04%. It was expected that it would increase by 0.04%. So that was good news. Year over year inflation increased by 6%. That was also expected. But if we go back and look at January year over year CPI or inflation, it was 6.4%. So we can see inflation coming down. And I think that's good news. Are we out of the woods? No, because inflation is still 6% and we needed to be at 2%, but we are making progress. The Federal Reserve over the last year has done, I believe, 9 rate hikes, and it's paying off big time. They got a meeting March 21st and 22nd. And I think the CPI data will help them make a decision on whether they're going to increase short-term interest rates for the 10th time. I believe they will increase short-term interest rates because, again, guys, inflation is still 6%. We're nowhere near 2%. So they got to continue to increase short-term interest rates to force inflation down. And really increasing short-term interest rates just makes it harder for people to borrow money cheaply. And normally when people borrow money cheaply, they tend to take that money and buy things that they don't need. And that's really what we're trying to stop, is people spending money on things that they really don't need and driving up prices. Now, our basic things that we need to live, certainly we got to spend our money on those. But we've done that, and we've done it effectively at a 2% inflation rate. Right now, we're at a 6% inflation rate. So what it's doing is it's driving up prices of our goods and services for our basic needs. It's also driving up prices for things that we really don't need, for a lot of luxuries. But there are people in our country who are kind of recession proof. So they just kind of spend their money whenever they want to spend it. But for the bulk of us, when prices go up on our goods and services, it hurts us. We notice it. And the Federal Reserve understands that in order for us to have a healthy economy and for everybody to be able to afford the basic things they need to live, we really do need to have some price stability in our economy. And with inflation at 6%, that's not where we want to be. Price stability is when we got inflation at about 2%. So yes, on March 21st, March 22nd, at the Federal Reserve meeting, yes, they're going to increase short-term interest rates, in my opinion, by 25 basis points. Now, they may change course and not increase short-term interest rates. And the only reason they would do that is because of the recent problems we've been having in our banking industry, where we've had, I believe, 3 mid-sized banks collapse, close. And in order not to, pour gasoline on the fire, they may say, something, let's let this banking thing cool off before we do any rate hikes. So they may decide not to do a 25 basis point bump because of all these banking issues we've had and with 3 bank failures. Now, do I believe we have a systemic banking industry problem with big banks going out of business? No, absolutely not. We're not near that at all. What you have, these last several weeks, you've had, like I said, mid-sized banks and some who serve in specific industry niches got into trouble. The most popular one was Silicon Valley Bank, right? They serve the tech startup industry. That's where a lot of their deposits came from. That's where a lot of their loans go to. And they decided to take about $100 billion of customer deposits and put it in a 4-year treasury bond at 2%. Now, when they did that, the world was great. But the world quickly was not great, because at the beginning of 2022, the Fed started raising short-term interest rates. And that investment that Silicon Valley Bank made at 2% return started declining in value. That mid-sized bank, and I believe this was the 16th largest bank in the United States. So in my opinion, that's a mid-level bank. And it only served a niche population of customers. It's not like your big 4, right? Your big 4, Wells Fargo, Bank of America, Citibank, JP Morgan Chase, the big 4, they serve a plethora of industries, right? And have millions and millions and millions and millions of customers. So they're well diversified with their investments. You don't have to worry about any of them failing. Nevertheless, the Fed, I believe, can see light at the end of the tunnel. These interest rate hikes that they've been doing over the last year are working. Inflation is coming down. You remember inflation, I believe around June of 2022, was around 9.1%, guys. So from June of 2022 to February of 2023, inflation has already came down a full 3%. Now, again, we're not out of the woods. We got a long ways to go, but that is good news. And yesterday, when that CPI report came out, the market was about even had a little bit of a slight bounce, which was good for us because remember, Monday of this week and Friday of last week, the market sold off when we started hearing about this Silicon Valley Bank situation and Signature Bank situation failing. The market sold off. So we had a nice little recovery yesterday with that good news from the CPI report. So what am I going to be doing and what do I recommend you guys do going forward? I recommend you continue investing. I'm going to continue investing, man, in paper assets. Because I believe on the other side of this bear market, the next bull market is going to start. And when it does, all of these investments that you're buying right now, guys, these paper assets, specifically ETFs that track the S&P 500, ETFs that track the total stock market, those are the 2 investments I recommend you guys consider. Don't get fancy with it. Don't try to be the expert. Don't be out here trying to pick individual stocks. No, just stick with ETFs that track the S&P, ETFs that track the total stock market. And if you do buy individual stocks, only buy individual stocks of blue chip companies that you believe will be here tomorrow, right? That's it. Outside of that, don't do anything crazy with your money, guys. Don't be out here spending your money on things to make other people wealthy. Please don't do that. Please don't do that. Please don't be afraid about keeping your money in the bank. And I know I've made a couple videos with some pretty edgy titles. But listen, man, our banking industry is fine. And most of us are not going to have $250,000 in our bank account anyways. And remember, with FDIC insurance, you're covered up to $250,000, no matter what bank it's in. Now, if you are fortunate enough and you have above that amount, then all you got to do is keep $250 at one bank move the rest of it to another bank. And then if you got, let's say you got $1 million, all you got to do is take 250 and move it to 4 different banks, and that covers your $1 million. Drop me some comments down in the comment box and let me know what you think about the February 2023 CPI report and where we're at with inflation. Do you believe we're making progress, or do you believe we're not making progress? I certainly believe we are, but I'm curious to hear your thoughts on that. If you want those 12 free stocks from Webull, click on that link down in the description box. Open up that new Webull account today. Go get that free stock. Go get that free money. If you're stopping by the channel for the first time, please consider subscribing, share the video, smash the like button. Thoughts become things. If you can see it in your mind, you can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. And I'm going to catch you on the next video. Peace. Today's video is sponsored by my company, RF Financial Consulting. And in my company, I work with individuals just like you through financial mentoring and coaching sessions. And in those 1-hour sessions, we talk about strategies to help you get to your financial freedom, whether it be through real estate investing, stock market investing, creating additional streams of income, credit card arbitrage, or starting and growing a business. If that's something that you might be interested in, there's an email address in the description box of the video. Send me an email and let's discuss if I'm the right fit for you.